Investment Solutions is South Africa's largest multi-manager with over 175 billion rand in assets under management. Their core focus areas in the construction of risk profile solutions for retirement funds and individual investments. And joining us in the studio then to talk about that investment strategy is Glenn Silverman, Chief Investment Officer at Investment Solutions. Hi Glenn.
Hello.
You've been moving around the world and we've been sitting in this studio, we look at the boards and we talk about the crisis. And as I've said, you know, a crisis eventually has to become normal. It can't stay a crisis forever. You've been talking to fund managers and money managers, Chicago, you say, New York, Paris, Edinburgh, London. So give us a feel of what they are seeing at the moment in world markets.
So we tend to do these major trips twice a year. So it's a very broad coverage. We saw some 30 underlying managers. So I think we have a pretty good feel. They would cover fixed income through equities, through the more flexible type of managers we meet. And I'd say pretty depressed bunch out there. They think things are tough. There's no question, if you have a discussion around macroeconomics, and many do not. Many say we are stock pickers, we have a 100% equity portfolio. Please do not concern us with those greater concerns. We're not interested. There's always a cheap stock. There's always a share that will go up, and we do buy somewhat into that, whatever. I think even bottom-up stock pickers need to be aware, obviously, the environment from which you work, and because I think it has impact at the sector level, at the stock level, etc. But stock pickers saw lots of opportunities, saw a lot of differences between sectors, between shares. Anyone who spoke macros was pretty concerned about the environment.
David, that sounds a bit shocking.
I can't accept that, and I know that Glenn, put his eyebrows up, etc. And how can one buy a stock in a background where we've got a Greek crisis or a European crisis? How can you ignore those factors? How can you ignore inflation, interest rates, and all the other macro factors that actually make up a global economy at the moment?
And a big threat, perhaps, of another recession.
Yeah, I'd like to answer that because it was fascinating to me as well. I've been doing this for 15 years, and this is very interesting. We looked for some kind of niche kind of managers. Managers have delivered some very strong alpha numbers, and these guys are guys who take 20-year views on markets, and they're saying, therefore, the current economic interest rate environment is irrelevant. Now, one manager spoke to us about a turnover of less than 5%, which is particularly low for any equity kind of manager, and an average length of time that their companies that they invest in have been around 105 years. So a manager like that, I guess, and there are not many of them out there, is saying, listen, we really don't care about the macros, we're just not interested. Unless a company has a 25-year track record of strong balance sheets, paying dividends, etc., they're not even in our universe. So the universe of tens of thousands, they have 200.
Yeah, the ghost of Warren Buffett is already with us.
Strangely enough, if I could just add something, because I was at Buffett's annual general meeting, and the way that he looked at the world, when people asked him a similar question, he said, US growing at 2.5% real, population growth 1%. We're improving our wealth 1.5%. 20 years, you're going to be 30% richer than you are at the moment. I can live with that. Now, you can do it when you're Buffett, but I think if you're Glenn Silverman, handling 175 billion and people are measuring you on a quarter-to-quarter basis, it's not easy to get away with that.
It sounds reassuring because we do tend to look at the numbers every day, and there's a herd that moves around and there's a bit of profit taking. I mean, Buffett was the one who said that don't buy shares that you wouldn't be happy to hold for 10 years if the stock market closes for that long.
100%. I have to point out those are the managers we haven't hired. Those are the managers that I think would be problematic for us when you do have to report back to trustees and others on a quarterly, annual, and semi-annual basis. In fact, we had one manager we met with who's a strong sustainability manager who said, if you're going to come and talk quarterly performance, we'd rather not have you as a client, because we really want to talk 3 to 5 to 10 year views. There are some like that, but I need to point out that that is not the majority. The majority of stock pickers, most do take the macros into account. So if they're not going to take what's going to happen to Greece, whatever, they certainly are thinking about the kind of the macro factors out there and then probably representing that at sector level.
But they have to worry about things like China, where you've got demand for commodities, and the people worry about the growth in China dropping. Now, as David said earlier, there's signals that they want to keep the stimulus going. But if all commodities are going to drop, that must affect your stock picks. You can't be taking them in isolation.
I would agree with that. So my perspective is very much yours, and that is very much our approach. But it was fascinating on the strip to see such a wide array and gamut of managers stretching from 20-year views, and we really don't care. Actually, very few of them would hold commodity shares at all. They take it, these are not particularly sustainable businesses, very cyclical, so why even bother? There are others who are seeing a lot of value in those particular areas. I mean, the South African managers absolutely are now overweight for the first time in my 15 years en masse, on average, overweight resource counters. So many of them are saying these things have sold off so much that they are cheap.
You mentioned sustainability, and this is something that's on their mind. Increasingly, the importance of governance and sustainability and so on in the environment.
I think those are hell of important factors. It's something we're focusing at Investment Solutions. We've created a RI committee, Responsible Investing Committee. I chair that committee. We are serious about this. We're doing a lot of research into the area, trying to understand it better. I met with 3 or 4 or 5 managers who focus on this specifically. The amazing thing to me, you go to the US and you say, what about sustainability? What about ESG? Oh, no, that's not for us. That's for some. We don't want to be seen to be activists. We have good relationships with our management teams. We refuse to tackle them. We've got to stay on the right side. And if we don't like them, we sell their shares.
Is that the same as saying that we're not interested in the bunny huggers? Is it that kind of prejudice?
I think it's even more than that. I think there's a fear within that system that you just don't take on the authorities. That if you're going to not be nice to management, they're going to kind of somehow cut you off at the knees. And I was somewhat taken aback, but that was almost across the board. Again, I'll put out some press articles on this, whatever, but I got a very strong sense. In the US, you just don't take on management. We had a fascinating CFA conference where there was a guy who explained what happened to his career when he put out a sell recommendation. He was a sell-side analyst, and he put out a sell recommendation on one of the banks. It was a very difficult next 5 years for him, as you can well imagine. So these are very big issues.
I thought we'd overcome that. I thought we'd moved on, after the 2000, not 2008, even before that, in the 2000 era. I thought we'd progressed beyond that, where people are coming out with sell recommendations. And I also thought sustainability was really at the forefront of not activism, but of investment in the United States. I'm very
surprised. Hasn't it also become just common business sense
Yeah.
to say we want to make sure that businesses are sustainable and the boards have to ensure that?
I think when it comes to, everyone says we buy, it's actually not true. I mean, some people say we buy bad companies but at good prices. So that too is an investment strategy. We can accept that. Most of them say we want great quality companies. And if these are good management, they think about sustainability, and they in turn have taken this into account. But in the US, it was actually unbelievable to see they didn't care. Europe and the UK is very, very different. They have a very strong focus. Admittedly, we also met with managers who focus some time and attention and have gained some profile in that area. But I think it's so important to do.
Well, let's talk Europe and the UK. What was your impression there? Because the crisis is them, whereas the US can look across the Atlantic.
I love the statement also from the CFA conference. Everyone looks and says the grass is browner on the other side. Everyone says in the US, they said those damn Europeans have got it wrong, and if only they wouldn't mess it up, the world would be fine. They go to Europe and they say, well, those Americans don't really know what they're talking about. They have some problems of their own. So it's actually quite interesting to see how everyone said somebody else has a bigger problem than we have. No, look, the sentiment in Europe at the end of the day is tough, but there's also a lot of avoidance. We met some of our French managers and we say, what are you going to do with taxation at personal levels above 75%? Now, maybe these guys weren't over the threshold, the €1 million odd that they might be facing that one. But there are people emigrating and leaving countries. I mean, these are real issues. But at the stock level, most are saying we find opportunity.
So looking at what you've come back now, refreshed and exposed to all of this, has it changed the way you're thinking about your strategy here?
No, I think it's reinforced our thinking about strategy. Look, markets are very oversold. They've had a very tough time, and a bounce and a rally can be expected, but we have to see resolution of what you call an emergency. We've had emergencies in Greece going for so long that I think, and this was something that came through quite clearly, the talk is now more about when Greece will exit rather than will they exit.
Well, it's when, not if.
More when than if, and what are the implications thereof. We're doing more research to also have a look at just the views out there, and they do range from it's actually irrelevant, it's priced in already, don't worry about it, to the world is going to end, it's a Lehman's 2. I've heard both views soundly expressed.
David shaking your head.
I can't see it not having any effect, even though we know it will happen. I think everybody's going to say, what next? And you've seen it, Glenn, in the bond prices in Spain. People get very nervous. They want to rush their money out. Who's going to be next? It's not only investors, it's people living in the country who start to actually exit. If we're going to be next, how do you comfort the man in the street? They still want to hold euros, etc.
Yeah.
To me, it has very serious implications.
You watch the soccer and you see these happy crowds, and you watch the guys eating and drinking, and it's hard to believe there's this crisis. But it's not just, if it was one isolated country that could have an effect. Spain now, they're talking about the banks can't cover the liabilities. The government isn't able to cover the banks. It's not just Greece.
It was a fascinating comment I heard, which I hadn't given much credence or thought about much. Many of the people we spoke to said Germany should just leave. Instead of talking about who will leave and after them, who will leave thereafter, why doesn't Germany just leave? They kind of are really, and it's not just Germany, maybe Austria and Finland would also give an example. You know, AAA rated, strong balance sheets, they could actually go and leave the rest to be this weak euro, etc. Rather than saying, is it Greece, then Ireland, then Portugal, then Spain, then France, that all has to kind of join. I thought it was quite interesting as well. So it could break two ways. The weak leave or the strong also decide to exit, but there is still a very strong commitment to try to keep this together. So the sense we get again is we get Greece out and then we try to put ring fences and firewalls and stuff around everyone else.
South African economy, South African market in relation to the Eurozone?
But I think really important, we've always spoken about South Africa as this small boat in a huge ocean. You know, really most of what happens within the country is not that relevant to investors out there. It was another thing that shocked me. We met fixed income managers. They said, we've had a risk-off event, we sold South Africa. I said, why? They said, no, because in risk-off events, you sell the rand, you sell South Africa.
What about?
I said, but this was created by Europe. They said, we're not interested. We've learned, you know. You can actually see the response, it's Pavlovian. We have a risk-off event, we sell the rand. Why? It's very tradable. It represents risk on, and so we have to sell it.
And the influence of this on your thinking on South African sectors and stocks here?
I tell you what, my big concern remains around this resources sector. I mean, we have been bearish on the world for some time. So you have a recession almost undoubtedly in Europe. I say we'll be in recession in the States by next year, almost unavoidably, and most managers are now starting to talk about that as well. They call it the fiscal cliff. We have something like 5% of US GDP coming out of the numbers automatically next year, automatically, unless between the election of November and when they go on Christmas holidays, they've got 3 weeks to do this, they come up with some decision not to. Now, as the automatic things are in place, they will take 5% of GDP out the economy unless they can do a deal. Democrats and Republicans have not been doing deals for some period of time, and there's a lot of angst between the two parties. And in China, the stuff we're hearing both on conference, our managers, etc., is not looking good. Credit has collapsed, housing prices under pressure, etc., but they will come up with stimulis and they will come up with packages.